Hey, my name is James Nicholson and welcome to my YouTube channel. Lenders have been cutting rates ahead of today's Bank of England meeting. This is a positive sign. If you're looking for a rate that's better than it was last week, this is what you want to find out. And who has got these deals? Well, we've got three major lenders that have been cutting rates. We're also going to talk about, are others expected to do that regardless of what happens with the Bank of England today? So if you're new around here and you haven't done already, before we jump into this, make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 44,000 subscribers. And by subscribing, you'll get all the latest property news, interest rate news, and much, much more. And let's get some views on this video. How do we do that? Simple. Smash like, tickle like, do something to that like button. That really helps with the YouTube algorithm, and that's helped the channel grow. So thank you to everybody that takes a moment to do that. So the Bank of England is widely, depending on when you're watching this, is wildly expected to hold interest rates today. Not great. We want interest rates to come down, but the inflation data just isn't allowing them to do that. In fact, they're looking at a few different factors. They're looking at the unemployment rate in the UK, which is increasing. So that's something that they're a little worried about, and they could cut for that reason. They're worried about the trade war with Donald Trump. Even if it is kind of agreed that we've got a deal in principle, our customers in Europe might not get such a good deal, or in Canada might not get such a good deal, meaning UK businesses will still get impacted by that. And of course, they're worried about the inflation data. But the inflation is on service side, which is unfortunate and frustrating. The Bank of England should be cutting rates, but I don't think they're going to cut rates today, or you'll know by the time you see this video whether they did or not. So comment below and let me know. But what is happening is the swap rate, and that's the rate that the banks that you and I borrow from, that went up a little bit in May, and that pushed some rates back up, but it's now started to come back down again, which is good. And so because of that, some lenders have cut rates, even if the Bank of England has not. Now, they're also motivated to do this by the fact that the market is slower. Now, you'll hear videos where we'll say the market is picking up, but it's still slow. It is getting busier. So two things can be true. It's getting busier, but it is slow. And so lenders want to get your business. So what's interesting is the 2-year deals that you can get at the moment are actually the lowest that they've been in 3 years, which is really, really good. And so the average 2-year deal sits at 5.12% average at the moment. Now that's nearly 0.25% down on last month, and that's in the right direction. That's what we want to happen. Now that's not the headline rates. Often people get drawn in to watch my channel and newspaper articles because of a headline rate that's under 4%. I've got an update on one of those at the end of this video. But what about the 5-year average? What's that amongst all lenders at the moment? Well, that's had a big drop, and that sits at 5.09% average, and that's down from 5.48%. So nearly 0.5% just since May. That's good if you're looking for a mortgage at the moment. But what about lenders, individual deals? Who's got some deals that we should check out at the moment? Well, Santander have some good deals at the moment. They've been cutting rates. They haven't cut their headline rate, but they have been cutting their rate. So they've got a 2-year deal that people can look at the moment. The rate on that is 4.4%. But here's where this is good, because this is for 90% loan to value. Meaning, if you're a new buyer and you've got a 10% deposit, that's good. Or if you're a remortgager and you've got at least 10% equity, you would be considered for this mortgage. That's good. Fees aren't too bad on this one as well. They are £999. So I think Santander is good. It's not the best headline rate, but these are better because these deals are for people with a smaller deposit. Often when we talk about rates that are 3-point-something%, you've got to have 40% equity in there, which not everybody has. What about Virgin, who's part of Nationwide? So Virgin, they are getting competitive as well. They've got a good 5-year deal, which they're pushing out to the press at the moment, which is 4.14%, and that is 75% loan to value, meaning you need a 25% deposit or 25% equity in that deal there. The fees on that one are £995. So again, moving in the right direction, and that is what we want to see. As I said, the swap rate determines what lenders can get and give a rate to you guys, and that has dropped over the last few weeks, which is good after that big rise in May, which saw rates creeping back up. And also, we've got a good deal here from NatWest. NatWest have been really competitive over the last couple of years. So we've been running this channel now for 3 years, and we've often done roundup videos on what rates are good. And NatWest have been aggressive on pricing for a while. They're trying to get market share on that. Now, any NatWest deal, often when I post the NatWest deal on it, people will say in the comments, I can't see that on their website. They're not very quick at updating their website. And I would always recommend that the best way to get a NatWest deal is always through a broker. Every lender, I always say, go through a broker because they make the application process smoother, they can fix problems faster, and they've got that inside channel and communication that you just don't have. For the sake of 500 quid, when you're borrowing hundreds of grand, I think it's worth its weight in gold. So do always do that. This deal by NatWest is a 2-year deal. And the rate on this one is 3.92%. So a smidge down, and that's moving in the right direction there. The loan to value is 60%. So that's what I mean by these deals. You need to have the best headline deals that are under 4%. They want 40% equity. That's why that Santander one is really good for people that don't have a lot of equity or you don't have a big deposit. That is really, really worth looking at there. Now, the fees on this NatWest deal are higher, but they're not still too high. They're not prohibitive. They are £1,495. So look, they're not the best in the world, but they're definitely moving in the right direction. And so I think that even if the Bank of England don't cut rates drastically over the next few months, it's more likely now that we've kicked the rate cuts towards the end of the summer. Autumn is more likely now. But what I do think is that mortgage rates, lenders still could cut rates for us because the market is slower. They want to get the market moving. And this is exactly what happened this time last year. The market started slowing down. Lenders started cutting rates in order to get more competitive, making them less margin, but making better deals for people like you and I. So look, what do you think? I'd love to know your thoughts and opinions on this. Do you think lenders are going to keep cutting rates? When do you reckon we'll get a rate under 3%? Let me know in the comments. Do smash like and subscribe. Check out all the other content as well on the channel, including this video right here.